the kind of the most real alt season was actually right after, maybe like early 2023, after the FTX crash, where it was just like everything reflated because it was all similar pools of capital with the same thesis. But now everyone's thesis is so different, and there's much less capital, I would say, for the alts, that there's just going to be a ton of dispersion. So like a classically oriented alt season not happening.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Bell Curve Roundup edition. You got Michael's 1 and 2, Vance. How we doing?
Good. Yeah, just hanging out. It's feels like summer today, at least. It's nice and warm in SF.
It does. Guys, do we want to make this a macro or a true crime podcast?
We got options.
Karen Reed or Iran?
There's the only two things that can hold the public's interest, either murders or other crimes or macro.
Yeah. Michael, can you just give us a little bit of a... So Karen Reed, give us
I'm the one representing this because I brought it up.
Yeah.
Okay, fine. Well, Karen Reed, John O'Keefe was killed, I think 2 years ago. His girlfriend at the time, Karen Reed, was charged with his murder, alleging that she ran him over with her car. There's a good HBO documentary on this that I would suggest anyone curious go check out. But we're reporting this on the 18th, and earlier today she was found not guilty, which is why it was top of mind. It's just a really interesting kind of like police conspiracy, planting of evidence, allegations, who actually did it. It's like true crime in real life. Or it live, I mean. So interesting storyline that came to an end today.
Yeah, I did not realize that was actually still happening, but I'm glad. It sounds like, I don't know, if there are actually cops out there or people framing, I think that's one of the worst crimes you can commit. I don't know what the right...
I mean, there's some crazy stuff. Like,
I hate it.
The tail light of her car was bashed in at some point, but they don't think it was from when she actually allegedly hit him. There was like blood and hair that was on the car that somehow traveled at 20 miles in a blizzard without falling off. And it was the people who, whose home it was that were the ones who were intaking all of the evidence. So there's some sketchy stuff, but tinfoil hats are on.
Yeah, it does. All right, should we? I mean, I'm curious to get your guys' just sentiment on markets here at the current moment. And yeah, obviously, the entire world has been looking at Israel and Iran the last couple of days, and not to get too armchair expert here. Obviously, it's a little bit outside of domain of expertise, but a couple of things. I mean, actually, I don't know if you guys saw, but Polymarket actually moved before like futures indices, which I thought was super interesting. And it was a pretty wide gap in terms of this type of move. It moved like 20 minutes before other markets, which I thought was pretty significant. Very cool. But obviously, people are pretty spooked on the idea that maybe the U.S. could get directly involved here. So I don't know. Maybe not. We don't need to comment from like which political side are we all on perspective here, but just from a market side perspective, I'm just curious if you guys think this is like a blip, something bigger to pay attention to. How are you guys categorizing this internally?
I'm surprised that markets are hanging in there to the extent that they are. It seems such that this has been billed as the possible worst case scenario for maybe over a decade for markets. And I'm actually reading an interesting book at the moment called Choke Points, which is the history of sanctions from the US. And in the Bush and then the Obama years, there was one Treasury official who was the lead for sanctioning Iran. And they did all these things. They tried to cut their domestic exports. They tried to cut all their access to these financial services. They tried to cut access to the actual central bank of Iran via sanctions on the SWIFT network. And then there was these other kind of sanctions that would have cut off oil exports entirely. And at that point, in the early 2010s, the administration didn't want to do any more sanctions because their case for oil was that it would be anywhere from $140 to $160 per, as at that point, Iran was actually a meaningful portion of the oil that was consumed in the U.S. Since then, the fracking boom and the nat gas boom have kind of considerably filled that gap, but they decided not to do sanctions to the extent that they have done them today as a result. But all of that oil now flows to China for the most part, and China pays and receives invoices in renminbi, and that forces Iran to actually spend the Chinese currency in China. And so it's kind of this like colonial power relationship between those two, and the Iranians are not super happy about it. And so I think China is going to bear the brunt of really any rise in the oil price today. But overall, it is this sort of macro calamity that has been 30, 40 years in the making since the Islamic regime kind of took power in Iran, and it kind of seems to be over. And I'm more of a no war guy, but I do think if you have the shot, it is probably worth taking in terms of being plus EV and just kind of neutering them entirely. And that seems to be where Trump thinks they're at. He's kind of like making jokes about taking the guy out, the Ayatollah Khamenei, I think is his name. And so it seems that he has the situation under control, but then you listen to the Steve Bannon and Tucker Carlson pod, and Steve Bannon's blackpilling, and Tucker Carlson's like, it's over. And it took all of like 5 months to really get to this point. So I don't know. I don't know what the future holds for the MAGA coalition, but I probably don't think it's as detrimental to the movement as people are making it seem, especially if it's just a clean strike and then it's over.
What did you think of the Ted Cruz interview by Tucker Carlson?
I didn't watch it yet.
Ted Cruz just got put on his ass.
They did.
It was pretty bad.
Yeah.
1.5 minute clip that I saw. I don't know if the full thing's come out yet, but
it did. I watched some of it, and it's Ted Cruz quoting scripture about how if you defend the Israel state, you will be one of the chosen people, and Tucker just destroys him. I don't know.
I think some of the data points that I have read and heard on some of these interviews is, number one, as per the strikes that did occur so far, they were directed principally away from oil refineries and oil distribution centers. And so that, I think, is one element that, maybe there's some impact that the U.S. is having on where these strikes are occurring, at least so far. So it doesn't seem like there's been a massive disruption in the oil distribution coming out of Iran yet. The other data points that I think are interesting, number one, we already have air superiority over Iran. And so there's nothing that's flying in or out. And the other one is that an estimate is that they have somewhere between 2,000 and 2,500 missiles. And in the strikes that occurred so far, most of which were picked up by the Iron Dome, they were firing anywhere from 400 to 500 per night. And so it's not like they have this massive war chest of ammunition and kind of capabilities that are still remaining to be fired or utilized. I don't think that if there is any sort of conflict officially or any continuation of what's been going on, it will last for very much longer. I think that we will get to some resolution from a conflict perspective soon. I agree. I mean, any sort of conflict with Iran is net detrimental. I don't think that it's as net detrimental to markets as I would have expected, frankly. But also, just as we assume or as we have seen so far, there just hasn't been that much effect, in terms of mass destruction or mass interruption with economic flows. It seems like it was pretty targeted against specific people in Iran. And now I think the big question is, do they go after the nuclear enrichment sites? The bunker buster bomb is what's being talked about. That would be obviously an extremely targeted attack. Unclear as to what will happen, but hopefully it'll be resolved by the time we're having this pod next week.
Bill
Yeah.
Acton's fired up.
Of course.
The bloodlust.
Tweeting about the Strait of Hormuz. The amount of times I've seen Strait of Hormuz on my timeline.
Here's a reliable indicator that this is almost over: is once people start naming obscure geographic features of a region that they also do not understand, we're almost done. So
I agree.
Yeah. Hopefully, we're one and done tonight. So Trump did just approve, or told somebody approved a strike. But
great.
Who knows?
Yeah.
There was also a pretty funny photo. Someone caught a photo of an oil tanker on fire in the Strait of Hormuz, and they said they're setting fire to the oil tankers. Turns out that an oil tanker just crashed.
Immediately, people were tweeting, "Are you ready for $150 oil?"
Yeah. This is why you can't take this stuff serious. Fog of war still exists in the era of Twitter and everyone.
It's even worse. The fog happens on Twitter.
Totally. Right. It's very confusing and overwhelming. It's not. So maybe everyone take it with a grain of salt. I agree with you, though. I think that when you have crypto Twitter talking about macro, that's almost always that's a very reliable bottom indicator. So I don't know. I'm not a markets guy at all, so ignore my thoughts here. But
are the deal.
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Okay, I want to get your guys' thoughts on, let's talk about stablecoins. It's been kind of the topic du jour of the last month, but I feel like we've got a little something to celebrate this week, at least, because we've got the GENIUS Act, which passed the Senate. And importantly, this was an overwhelming bipartisan vote. So historically, the Democrats have been very against this. Senator Liz Warren was drumming up a bunch of fears, saying that there were personal interests that the Trump family or Donald Trump might have here when it come to a stablecoin. But I think there were something like 18 Democrats that voted for this. So really positive show of bipartisan support here. And you're starting to see, Circle closed. We're recording this today on Thursday, Wednesday, the 18th. And we actually saw I think Circle crossed $200 on the open markets, which is pretty nuts. And we also, which is bananas.
Just because it was such a good disclosure regime, right?
That's right.
That's how good the disclosures were.
That's exactly right.
So it is a 2000x PE, but those disclosures are so good.
They're phenomenal. Well, what do you think? What's the it's kind of like there's an analog here to token markets, right? Where when everyone wants to bet on a meta or a theme and there's no liquid token to do it, you see people pile in, right? That's been the story for any number of tokens in the past. I feel like this is the TradFi equivalent of that. Yeah.
It's the TradFi equivalent of a phenomenon we like to call low float, high FTV. And that is the secret sauce that's happening here. And I mean, you look at any of the recent IPOs, eToro, this one called SailPoint that was a PE-backed cybersecurity firm that went public. Circle, obviously, I think there was one going out this week or maybe it went out today that's up 20 or 30%. But, it kind of is the cure for this behavior in traditional markets is more IPOs, because the pop will get less and less and people will get more and more wise to the game. But you have to remember, the IPOs that came out and did really well were CoreWeave and Circle. And the amount of negative articles written about those prior to their going out was unbelievable. So I think that some of this is just a reversion to the mean and a little bit of a lack of access. I do think, and everybody should watch the token disclosures podcast on Empire and look at the token disclosure system on Blockworks as well. A lot of this is a result of just like such scarce amount of ability to get into crypto companies. and a lack of desire to get into alts. And some of that is because of the disclosure regime. Some of it is frankly just because there's not a ton of good alts. But as Circle hit $200 today, Coinbase was up, I think, 15 or 20%. So it's kind of this correlated bid, and maybe it's event driven because the stablecoin bill passed yesterday. But I think what we're hearing and seeing is people reaching out to us to do the Kraken IPO or do the Kraken secondary sales or things like that. And I think that's just going to continue as long as these companies are high quality. But for something like Gemini, I don't really know how real that business is, and I wouldn't expect this type of pop to happen with something like that.
I got a question for you guys, or something. I saw someone tweeted out. I'm sorry for not giving you the proper credit here, but sorry, but alt season is happening in public markets, and I think there's some truth to that. Where maybe one mental framework to try on for you guys is that some of the alt season speculation is actually happening in public markets now between like Coin and like Circle, but also these treasury vehicles as well. And we're almost in a little bit of a bear market in more traditional crypto alts here. We kind of have ran out of people that want to buy these things in good projects for the most part, outside of a relatively small handful. And maybe one anecdote here, and it's kind of a silly, stupid thing, but basically every bear market that I've ever seen has actually been characterized by a perp dex that does buybacks, which is literally what you have in the form of hyperliquid here. And that's a little bit of a joke, but that is actually like a classic hallmark of like an alt bear market. Like I can just remember GMX.
That's a little bit, point A to point like Z.
It's like a half a joke, right? Hyperliquid's a phenomenal project, right? Like you wouldn't.
But I will say though that like if alt season is dead, how is hyperliquid at 40 billion?
Right.
So I think the rule is kind of like everything seems to do well in terms of IPOs. And I would say treasury companies to an extent, but this is all such recent history that I think you need to see it probably do well for like a year or two, or at least pass unlocks for it to be a real trend. And what you see in crypto markets is just hyper dispersion. And like to the extent that it's usually we track coins on TradingView like everyone else does, list of names, and then you pull up, is it a day, is it a week, is it year to day? And you can see, most of the alts are like really correlated in this tight band. And then there's like 4 usually who are, above that by a standard deviation or 2. And it's hype, it's syrup, it's Sky, formerly known as Maker. And then funnily enough, it's Farcoin. So it's like, only the really real stuff and then like the best meme. And Farcoin is pretty funny. And Dip Wheeler is hilarious. So I think there is a method behind the madness, but it's too soon to tell if it's a real alt season on the NASDAQ.
The other things that I would add are, number one, I think what we're seeing with the public liquidity and public activity is, frankly, just like we're tapping into new sources of capital that we haven't been able to historically, whether it's convertibles, whether it's retail orientation, the people that are buying the Circle IPO right now or the Circle shares right now are either one, not very understanding of how crypto works, because if you were, you'd probably do a spread trade on Coin and Circle as opposed to just buying Circle. And number two, you're probably just looking at it, a group of people who are looking at it as a trade. This thing is blasting off through 200. Maybe it goes to 250, but I'm going to sell it before that. Like, this is not long-term oriented buyers for the most part. And so that I think is new pools of capital that just frankly haven't been in crypto historically. But also historically, when we've seen an alt season, quote unquote alt season, it's because we've gone through the same process, twice now, where Bitcoin moves and then alt layer ones or Ethereum moves. And then that trickles down into some other type of, excitement, DeFi summer, whatever the kind of like norm may be at that time. That's where you start to see an alt season. We haven't seen, we haven't seen a Bitcoin move and an Ethereum move and a Solana move that would be enough in terms of wealth creation to justify an alt season yet. And so that's why I think we're actually closer to the start of this process than we are the end of this process. And while we may have, also, I don't think we're even close to the end of the process of these publicly traded crypto vehicles.
No.
We are just getting started in terms of where these things go and what they're able to do. Now, I don't think there's going to be 25 of them that launch every single week, but there will be a lot of them that try to get, breakthrough success. And we'll probably see a bunch of different assets that are represented that currently are not represented, as these PCVs. And so I think broadly, like, yes, we haven't seen an alt season yet. And yes, maybe there is an alt season going on the NASDAQ, but I think that that's irrelevant because we just haven't had the wealth creation to create an alt season within crypto yet.
Like the meme coin season was like an alt season scaled down to bathtub scale. Was that an alt season? I think the only real alt season that I would classify as likely in the near term is something that's fundamentally driven, and I think that's why the disclosure regime is so important.
Yep.
But we've done process of elimination on NFTs, meme coins, games, different kind of new infrastructure, and I think we're getting to a point by just process of elimination. People only feel comfortable holding a handful of coins. Either it's the majors or it's something that has a really optimistic future looking investor base with the fundamentals to justify that. So, it's I will say as well, not to argue against myself too much, but Bitcoin has not even broken 100K on the World War III scenario. And that is very, very indicative of how much capital is ready to bid that. And we heard from people that it was kind of sovereign wealth funds that bid up the price of BTC over 100 after the election. And I think the market's psychology is effectively under 100, it's the sovereigns, and over 100, it's the treasury companies, it's the ETFs, it's the retail investor base. And I still, think that we're going to see 250, 300K BTC this year. After this war is done, and after, and that may be as simple as Trump pressing a button. And then after the bill is done, I don't really know how much there is to price in terms of a wall of worry. And somebody told me yesterday it's like maybe 61% of the NASDAQ QQQ earnings is actually NVIDIA. So, if you want to know where the stock market is going, you should just develop an opinion on NVIDIA. And our opinion on NVIDIA and AI is that it's very real, or at least it's very real over the next 5 years. And after that, we can kind of sort out, who accrues value or what's going to happen.
Yeah. I think also, I'm curious if you guys think so that cycle of wealth creation, whether or not that's enough to fuel alt manias, like it has been in the past, like, because historically, Bitcoin has gone up anywhere from, 10 to 20 or 30x, and same thing with ETH and Sol. I don't really see that on the happening anytime soon. I don't think it's enough wealth creation anymore. And, we're probably on the eve of, pump fun. My pattern matching here is that this probably is going to suck the last of the speculation out of meme coin markets, I would guess. Like, this is sort of what happened when Blur launched. And it's not like Blur didn't kill NFTs, but it provided an index to bet on NFTs and gave the last vestige of liquidity for people who were bag holding. So it kind of, I can see the same thing happening with this pump fund launch. Like, people are going to have to fund that trade somehow. So I don't know. I also, oh yeah, sorry. I don't know if you guys, that was a lot. I'm speaking stream of conscious here.
I think it's so I think maybe first thing to define is like, what is an alt season? I think classically it's a time where there is zero cost of capital and there is no desire to underwrite fundamentals at all, and everything goes up in a uniform fashion.
I was going to say the bigger thing is you can throw a dart against the list of tickers and make money. Like, that's what an alt season is in my mind. I just don't see that.
I don't see that happening. Yeah. I think that's like the main thing to kind of fully get back into people's head. And it's been 4 years of people hoping for this, everything goes up. And I think the kind of the most real alt season was actually right after, maybe like early 2023, after the FTX crash, where it was just like everything reflated because it was all similar pools of capital with the same thesis. But now everyone's thesis is so different and there's much less capital, I would say, for the alts that there's just going to be a ton of dispersion. So like a classically oriented alt season not happening. What I will say is going to happen is you just see things like Sky has tripled this year from the lows. Syrup, I think, probably has also tripled. And those are stories that are led by real fundamentals. And people are probably sick of us talking about the same 3 or 4 projects. But guess what? There's only like 3 or 4 assets, even in TradFi, that are like ripping the cover off the ball. And that is where people need to orient themselves towards. And it's a different mindset.
Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. I'm curious what you guys think on the infrastructure front here. And, one thing, I have a thesis I'd love to see what you guys think of. But if you think about the private companies that did really well during the 2020 and 2021 run, it was these sort of CeFi infrastructure companies. It was the custodians and the prime brokers, right? The BlockFis of the world and the Anchorages and the BitGos. And they got funded at massive valuations. And a lot of them have, some of them obviously failed, but some of them have kind of slowly are working their way back towards growing into those valuations. And a lot of them failed along the way. And I think a lot of the projects that were very sexy in 2022 and 23 were also kind of on-chain infrastructure projects that got bid up very high. And they're also working their way through. But I think there's a little bit of a difference in between projects that have a liquid token versus projects that are private, because you get punished much more, I think, for over raising if you have a liquid token. Because consider being like a private company, you raise at a really high valuation in 2021. If you don't run out of money, you don't have to go back to the private markets and do a down round, and you can just take forever, right? It can be kind of shitty. You can grow your way out, but you don't have to do this horrible thing where you revalue the equity. If you do the same thing, like let's say you raise too much money, you sell too much of your, tokens to investors, they will dump that token when the unlocks come, right? So you could do the same thing. You could be like, I have enough money in my treasury. I don't need to go back to markets to fund yourself. But month over month, those unlocks are going to keep hitting and your token's going to get smashed into the ground. And so even as bad for people who are out there sitting like, it couldn't be that much worse. Look, it's already down 60%. It can keep going down. Like the unlocks on a lot of these tokens are still horrible.
It takes a long time to go through unlocks. I think generally the lesson of investing that we've had to learn many times over is just it takes so long for things to play out, far longer than you think. Even unlocks, it's 2 years of unlocks, but then some people hold to the end and then they sell the year after. And I think that is ironic. It's not ironic, but that is why you really need good VCs, is because, if you want me to tell you how painful the unlocks are going to be, just tell me who your cap table is. It's very simple. And so I think that stuff will take a long, long time to play out. And the same thing on the fundamental side, that takes a long time to play out. I think there's certain projects right now, Hype, Sky, Syrup, where all they really need to do is execute. But the execution takes a long time. And it's not just you can do everything today and then it manifests the day after. It is a multiple year roadmap where the prognosis is not an alt season. It is your token grinds up slowly. And then if there's some inventory that steps off the sideline, that's going to send it down 10% for a week. And then it will resume the up only once there's buybacks. So it's just a different mental model, but it just takes forever for things to play out. And the whole, private market returns to public market liquidity shtick that was pitched by VCs in our industry to LPs, it's just not true. It is a venture mindset. You need to have that mentality when you're investing here.
Yeah, the only thing that helps you in terms of unlocks is a successful business model.
Yeah.
And right. If you don't have that, then it's going to be really painful, especially if your cap table is what Vance is alluding to. But if you do have that, or you have path to progress of getting there, it's going to be great, because it's going to be this slow trudge upwards, and you're going to have aligned partners along the way who are helping you get there.
What do you guys what's your most up to date in terms of how you counsel founders who are thinking about launching a token? Because one responsibility of having a liquid token versus just being private or being pre-token or whatever. One, I do think, a little plug here, but eventually investors are going to demand disclosures in some way, shape, or form. So we just launched a very lightweight, very check the box, disclosure regime. Hopefully over time we build that out into something a little bit more sophisticated. But there's like that kind of overhead on having a public token. But the other thing is you need to be a spokesperson, not just for your product anymore, but for your token. You have two products now. You've got your product and then you've got your token product. And if you're a CEO or a CFO of a public company, you spend a shit ton of time thinking about investor relations. You got to talk to the investors, you got to message things publicly, you got to do it in the right way. And there's the crypto equivalent of that, which, you're not doing this really formal boardroom. I'm going to walk down my financials, but you got to do the equivalent of that, which is probably being loud on Twitter, and creating things to do with your token. But I'm curious.
Yes and no. I mean, it really like I think you definitely have to talk about both in conjunction with each other, but you don't need to be shilling. And I think actually, the ones that are the most successful are the ones who shill the least. And let the business take care of itself. But the big thing is like you can just track these things on chain and you can understand how they're doing and what they're working on. Like that's what matters way more than you have to go out there and pound the pavement and get everybody aligned with this token concept. I think there's also a difference between like what's an L1 strategy versus what's like an application strategy. Or infrastructure versus application, business model versus not business. In most cases, I think the ones that frankly didn't shill are the founders and the protocols and the tokens that are doing the best.
There are no Jedi mind tricks that you can use to magically manifest buyers of your token. I think the market's basically shutting that down.
Right.
But for the things that are fundamentally driven, like there is no ceiling. And like the stablecoin bill passing, the market structure bill getting its kind of head start now when it should pass at the end of the year, there is going to be a path for all the disclosures and all the marketing and all the kind of IR functions of a traditional company, but done in crypto. And I think that's actually going to limit the creative space that you have to just go on Twitter and say crazy shit, as a token founder. And I think that's kind of how it should be, where you have disclosures, you have fundamentals that are on chain, and then you have a standardized platform for communications. So I think that's a good thing. But I would say people probably spend less time on CT and more time in these forums, and that would benefit them pretty substantially.
Look, the other stuff that we have been advising more so, I'd say in the last 6 months, less so prior to that, is this whole construct of like, I'm doing this for the community. The community needs a massive airdrop. That whole concept is completely outdated. So like, if you're a founder who's like thinking about distributing a ton of tokens through your airdrop, like don't. And definitely don't talk to us about it because we're not going to be supportive of that. The whole like we need to go off and like build the best community because community is what takes us there. Like that versus like a BD strategy or like a true partnership strategy is just a weak perspective going forward. I think like the norms that we used to have on a lot of things that if we think back to like why did we have an airdrop, it's because Uniswap airdropped 14%, and that was thought to be like this amazing mechanism, and everybody just drafted off of that concept and just said, oh well, we're going to do the same thing, so like we need to distribute 14%. Why did we have 50% going to the community? Well, because at one point there was someone in probably with a law degree that said, well, 50.1% goes to the community, you have an argument for decentralization. Like we get closer to market structure bill and understanding what's sufficiently decentralized, like we won't need that construct anymore. And like, do you really want to be giving 50% of your tokens to people who are going to sell in 72 hours? On average, 90% of airdrops are sold completely within 72 hours. So like that is a real, problem if you're trying to, bootstrap this network and get it off the ground, and you're trying to do hand-to-hand combat with a bunch of people who are anonymous on Discord who are selling your tokens into the ground. Like it's just the reality. And so I think that there's a lot of like dogma and perspective that we should reevaluate and just frankly institutionalize more. And I know we've talked about it before, but like disclosures are a great way of getting there. And eventually, hopefully we have standardized financials. And like, that's another huge element that everybody should be looking for. So anyways, just some perspectives of stuff we talked about with founders.
I agree. if you were to look at the crypto industry through fresh eyes around practices that don't necessarily make sense and trace them to their root origin, a huge percentage of that would be because of some weird regulatory rule that people were trying to skirt or avoid back in a day where the regime was far more unfriendly. And
Not even a regulatory rule, like literally some lawyer's perspective of what the current at the time standard was, which probably has changed 10 times since then.
Lawyers make shit up too, just by the way, all the time.
So yeah, I think it's a really good time to question some of these practices. And the other thing too is that crypto Twitter, I don't know.
Last thing, I think we need to shrink the industry so that the industry can grow. Like every single time we push something like Ape Chain or Bored Ape, Yacht Club, or crypto's the future of consumer, or like any number of implausible things, like that is a valuable bullet of social capital, especially if the largest firms in the space get behind it and really push for it. I think, as an industry, and especially for the largest fund in the space, that is not us, they need to like get fully behind DeFi. I know it's not like the Facebook on blockchain thing that they would probably like, but really need to support the serious builders that have serious use cases. And the real tragedy on a lot of these things is, in the case of Hyperliquid, a lot of funds are just saying that's illegal, we can't have it, we can't do it, whatever. In the case of Sky/Maker, they've already sold these coins, like they've already given it up for good, and so they really have like no exposure to the actual real shit that's happening in the industry because it's like conceptually below them. And so I think on a serious basis, like these funds are really net negatives for crypto outside of the regulatory and compliance stuff that they do, which is helpful, but that's not going to turn the industry into a 10 trillion plus outcome. So that's my kind of soapbox about just like where the current like fund leadership of the space is and where they probably need to go.
I think that the industry is moving in this direction, though. And I think already, actually, the industry has changed an enormous amount in terms of how people think and talk about this space since at least the time that I got into it. And there's some amount of churn here. And I think it's healthy churn. Like the beginning of this industry was extremely ideological. And I'm really glad that they were, right? They gave us these really strong values. They gave us really decentralized protocols like Ethereum and Bitcoin. But I think that these people are going to be continuously frustrated. And okay, there are people who are just straight up pushing bad shit, but there are also people who, that Japanese soldier who's still fighting in 1975 in World War II. I see a lot of that on the timeline. And like, guys, you can't just preach this is so cool, and like it has to make money and it has to work. And I think the collective zeitgeist of this industry is we're tired of shit not working. And that's like rubber.
Good, getting to that point is a point where people are just, I'm not putting up with the bullshit. And by the way, this is not unique to crypto. This happens in every industry. Yeah. There's still people, there's Japanese soldiers in the 3D printing area. There's Japanese soldiers in the AI area, in the self-driving area. Like this is something that is recurring, but you do get to a point where the rubber has to meet the road. And usually that produces great outcomes.
Well, what I was going to say is that the worst thing you can do as a venture investor is try to push a perspective that you want to see in the world.
Yeah.
As opposed to what is actually happening and is actually working. And this is like, I think it's pretty, anybody who's followed the clean tech industry, like it basically blew up a couple of the traditional venture funds, Kleiner Perkins in particular in the 2000s. And look, like they wanted that to be the case. They wanted that investment strategy to work. They wanted, the world to be better because of their investments in clean tech. But the financials and the unit economics just didn't make sense. And you may want, crypto to be consumer. You may want, social media on chain to be a reality. The ownership economy to take off using blockchain technology. It's just, there's no evidence to suggest that it has so far. And so I think you really have to take a realistic perspective of, do you want this? And ask yourself honestly, do you want this to be the case? Or is this something that you're starting to see the kernel of truth around? And yeah, I mean, go to the stuff that's working and change your mind.
Yeah, so that same outside of the fund comment as well, it happens on a founder and like a product level as well, right? Like you can tell when the market is pulling demand out of you. But the graveyard of crypto is littered with people that built for a market that they think should exist or they think will exist in 5 years, and you just can't do that. You have to meet the market where it's at. I think David Sachs actually described this idea of being a taker versus a maker of markets. And when it comes to things like what is the market, you have to meet you are a taker of markets. Your job is to kind of divine where the market's at today and serve it, not where you think it's going in the future. And it's a subtle, but it's a really important difference, I think.
Yes, and I think people get caught up in being thesis driven, or catering to different types of founders that look more like, folks that they would want to back. But that's kind of why so many people are on the sidelines of something like Hyperliquid.
Jeff's very backable though as a founder, I think.
Yeah, 90% of people don't know he's like from Palo Alto. Like he's like
also no private rounds. So like there's some constraints on like, are you able to buy this token, on the market? Like, is this the right price? Not having the confidence to be able to like back up the Brinks truck and put on a TWAP, versus like, oh, I need like documentation and like a preset price in a round and all that. I mean, it doesn't look and feel like your traditional venture investment, because it's not. And that's what people have to get behind. It's also extremely huge. Like it's $40 billion. But, what are the chances that 3Xs versus, your random seed startup is going to get to liquidity and 3X from there? I agree. I think it is unfortunate that it changes. You have to have the mental flexibility to be able to like change your mind. And we also have had mistakes where we found founders in certain verticals and we're like, oh, let's build a thesis around this, and it just still to this day hasn't worked out. And gaming is one of those things that we just haven't seen massive scale success yet. And it's like, okay, well, that's fine, but you have to be willing to change your mind. And being a founder, being a taker of markets is the best way of putting it.
Can I ask you guys, how much of this is driven by LP demands, what they want to see? I could imagine this being the type of thing that LPs are like, I want to see a thesis here. I want to see that these people have thought about it. When the closer you get to the ground, you're like,
we have theses and we have themes, and we could talk to you about all the
max forever. Like here.
But the point is, it's like they change rapidly. Every 6 months, it's like we need to go back and reevaluate this. And I think the way that pulling behind the curtain a little bit, the way that we build theses is we start to develop a consistency of finding really world-class founders who are going after similar ideas. And when you start to see 3 or 4 or 5 of them who are coming in with different but similar pitches, you're like, oh, there's actually maybe something here. And when you see them coming over from some of the top AI labs on the AI sector, or being an energy trader and coming over and looking at energy concepts, like those types of people have a differentiated perspective because they have the real world experience. And when they're coming to us and they're like, hey, I think this needs to be a protocol, help me build the Web3 side of this, and we can partner on that. Like that's where it really starts to connect. But you really can only develop a thesis in an area like AI or energy, or frankly, even like stablecoins, once you've seen like 4 or 5 or 6 of these founding teams who are world-class in their understanding of the market. And that's the difference between like, I want to go off and see this vertical, so I'm going to go find founders in that sector, versus I have these people knocking on my door and I'm talking to them every day, and like there's consistency across their themes and their theses. They're going after different problems, but altogether they could be a singular category. And so that's the nuanced perspective. But I frankly think like that's the definition of being a taker versus a maker.
So what would you think about stable coins as a potential category here? And I do think that across a bunch of different levels here, there are people who are doing very interesting things in this world at the current moment. And obviously, there's going to be a bunch of new stables that come online, presumably with the passing of the GENIUS Act. We didn't talk about this, but JP Morgan, I guess, filed something along the lines of JPMD, which is a USD deposit token on Base. So it's a permissioned USD token deposit, think like bank deposit, that enables JP Morgan institutional clients to move money 24/7 on chain. And I also see like kind of in the weeds here, right? Like shout out, to the stake houses of the world that are kind of finding very interesting ways of spinning up new businesses in this area. So yeah, I don't know if that's a thesis in and of itself, but there's I'm sure there's going to be interesting businesses built around the space.
Yep. I mean, I think in my mind, the creation of a new stablecoin from JP Morgan represents a capital infusion into the crypto ecosystem. It doesn't represent, crypto capital that's going to JP Morgan and never coming back. And so, how that might work would be, they want to go on chain. They need to be paired with something, another stablecoin. That stablecoin provider earns revenue. They want to be used as lending collateral. Okay, they inject a bunch of JPMD into Aave or Spark lending markets and lower borrow rates artificially with their stablecoin to get adoption. And so, I think these things do grow the on-chain ecosystem, and a lot of the monetization of these stablecoin projects is going to be through breakage. Just people who forget that they have things on chain and they leave those profits there to kind of just metastasize over time. And so I think this is generally a positive. It's so interesting to work with big banks, and if you want to get something done, you need to talk to 5 different advisory committees. And so I would assume this is the first step of many, and I would peg the start date of any of these iterations as 2026 maybe. As of right now, it seems like this is just a filing for a patent or a trademark.
By the way, I ended up poking around a little bit about what we were talking about last week about stablecoins eroding NIM. That actually isn't the case. So stablecoins, my assumption is that they would move onto a bank's balance sheet, like in the assets and liabilities. They're just treated like a product, like a money market fund. This is a little bit facetious to say, but checking accounts are kind of a scam. Actually, you are just getting they're a scam.
This is breakage. This is what I'm talking about.
Yeah, that's like the equivalent of that dead capital in Sky, right? That's literally what that is. You just don't have to pay any interest to people that are holding and checking. And it seems not even that innovative because it's so basic, but I think some Coinbase product allows you to hold your USDC in a Morpho vault, so you're earning yield right up until the point that you want to spend it. And that just feels really obvious. Banks should do the same thing. They should default hold your money in a money market fund, and as soon as you want to spend it, they should just move it out.
Way back in the day, I remember in I think it was 1998, I went to Wells Fargo and started my first bank account, and it had a checking account and a savings account, and the savings account was limited to how many withdrawals you could make per month, and that's literally the gating item as to what the difference between the two accounts was. This is 1998. There's barely online banking. I don't even know if there was online banking at the time, but that is the difference. It's if you're going to be writing checks out of your checking account or using your debit card to pay for things, that has to be money that's in your checking account, whereas your savings account earns the yield that they pay you. And I don't even know what it was in 98, but there should be no difference between the two, and you should be able to hold it in something that's earning yield up until the point when you want to sell it, and then gets withdrawn in a liquid format from that pool of capital. But Mike, to your point, I mean, we didn't get into it on the last pod, but yeah, the assumption here is that these aren't actually held on the balance sheet, and that this is basically a product or a business that's wholly owned or as a subsidiary beneath, and so therefore it doesn't actually change the net interest margin. Is the assumption of what a purchase by JP Morgan of Circle would look like. And it also potentially includes a deeper integration where you'd be able to move your, let's say, US dollars in your Chase account into USDC. That integration is, I think, one of the advantages that they were exploring, with a purchase of a stablecoin provider like Circle. Obviously not going to happen now. But yes, I think creating a stablecoin will be something that isn't, it's not on the balance sheet. It'll be actually probably something that just sucks up cash from customers who want to use JPMD or whatever it ends up being called in a positive way for the bank. Mm-hmm. So I bet the bank's business will do very, very well with these stablecoins.
It's just funny. I think Ben Bernanke wrote something back in the late aughts or maybe early 2010s or something like that about what banks do, calling it duration transformation or something like that. And it's this fancy word for gets artificially cheap funding from, U.S. consumer deposits to invest in risky securities and juice their NIM. But for them, it's like, hey, this is good for the economy. We get to invest it out to businesses, provide cheaper cost of capital for Amazon. And
And key point, get 10x leverage in the process.
I think that crypto might blow a hole in that social contract. Crypto's a funny thing of
Does
it's
not like social contracts.
No, it doesn't. And it's a funny like grounds up reimagining, and it's making people question pretty basic assumptions of how the financial system has worked for a long time. Like, should users be getting yield on their deposits, which I think they should be.
I mean, look, there's also like, I think it was last week. It was at the Coinbase Summit. They announced the 4% Amex card partnership that earns you 4% back in Bitcoin. Like, there's a lot of, I think, if you want to call it financial innovations that are going to be pro crypto, pro consumer, that are going to come like in partnership with financial institutions and crypto companies that are just better products. And I think that this is an example of that. Now, is the average person who's a JP Morgan customer going to move over into JPMD because they can earn 3.8%? Absolutely not. This will be slow moving at best, but it will erode around the fringes. But if they own the stablecoin, then they'll benefit from it.
Yeah,
I agree. I mean, I think it's kind of an exciting time for exactly that reason. You know what else? One thing we might have talked about it on the show or privately, I can't really remember, but I do think that prediction markets are in their early innings, and I think that is very interesting. And I can see, I've actually talked to some of the folks at Call Sheet, not quite so much Polymarket, but I do think that the people that connected Polymarket to news are not wrong, actually. They do something similar, right? There is now a global, it's almost like, the SEC whistleblower program, where everyone's got a financial incentive now to, if you see something and you call it out and it leads to a fine, you get some percentage of that fine. Think about that for any piece of information on global scale. It's really, really strong as an incentive mechanism.
Totally.
So I think that people that have large audiences and are credible and can kind of sniff around for this stuff will actually it'll be a really interesting business model for journalism, but also just people that have an audience. I view them as very positive, like really, really positive in general.
I think there will be some connection with prediction markets and real-time events, whether that's reporting on them or news or even just like a new format of kind of like newsworthy information. We're talking about how Polymarket moved before the markets moved. Like, that's real. We have seen a couple of ideas where it's like integrating the news into prediction markets in a way that I think is difficult to necessarily see right now. But I think the markets in and of themselves are potentially newsworthy.
There are going to be lots of different iterations of this, and there'll be different shades. Like, there are actually like surfacing critical information about the world and blending it with news. There's more of a visual, hey, do I want to, imagine like an Aiden Ross who hosts some stupid internet question and gets people to bet on it live. There will be many, many different types of flavors of this. And actually Polymarket, they have an integration or a partnership with XAI, where AI is giving, if you want to monitor the situation, and get live updates on how markets are moving, there's an opportunity to do that. But I think that people are scratching at something relatively real here. And I think it's interesting. It's one of these things people have looked at from a bunch of different angles. And I think there are good benefits from a bunch of different angles.
I thought you were going to launch a prediction market instead of this token transfer. And everyone was going to lose their minds, but I'm glad you didn't.
Maybe. We'll see. You know what else? Okay, one last thought on the prediction market thing. I wonder if people would use this so people generally use financial instruments to hedge in funny ways or make bets. And this has actually been a problem for commodity markets, especially, where policymakers don't like it when speculators bid up the price of oil because they think Iran's going to close the Strait of Hormuz or whatever, right? But there's a lot of speculative premium in commodity markets, which this is why policymakers have imposed price caps in the past, because they don't like it that these speculators are profiting off things that people actually want to use. I wonder if you could, instead of betting on, okay, like let's say I want to express the view I'm nervous about COVID or it's going to shut down the economy, instead of buying lumber, if you could just bet directly in a prediction market, maybe it would suck at least some of that speculative premium out of the unrelated commodities. I think that would actually be a societal benefit also. I don't know. Yeah.
Speaking of derivatives and hedging, the next pod I'm listening to is the Empire one with Josh Lim and Shalang. So
It's a good one.
that's if something is happening in the derivatives world, someone once told me that like all the people who trade derivatives seriously in crypto can be generally sat at a conference room table. It's it's like those two, and then maybe 10 or 20 others. So I'm going to take my cues from them before I comment.
Yeah, we have seen actually a concept that is doing kind of prediction markets specifically for financial questions.
Mm-hmm.
Even to the point of like, will the Fed raise rates, yes or no, or how much? I mean, that type of stuff I think is you can build a position or you can build a perspective through financial instruments outside of a direct prediction market, but it's just a lot cleaner and a lot simpler to ask the exact question and then say yes or no in a binary option context. And the tough part is, do you have enough liquidity and basically like enough integrations to be able to get to the size that people actually utilize this in a real financial manner? The reason why you had the Trump poly market effect is because it was such a crazy timeline and kind of a unique meeting of crypto native audience wanting to understand more about politics and track it that way. And then it built a base of liquidity that I think within poly market has generally stayed around more so than I frankly would have expected. Now with financial markets and getting to the root of whether or not these are efficient markets and liquid enough markets for them to be used as financial instruments, that's like a 10x or 100x difference in liquidity. And so I think that's the hard part. It's like what venue is going to provide that much liquidity for something as big as like our interest rates going to stay the same?
I think whoever cracks that will have a very valuable business on their hands, because if you're sort of a bizarre concept for you here, but imagine prediction markets become a powerful tool for journalists. Like here's another just mental model way of thinking about it. Let's say, how you create a Twitter poll and you kind of tweet it out and it tells you a little something about sentiment or where to poke around. Imagine someone that has a large audience, like a Zach XBT. Imagine if Zach was like, hey, I'm going to create a prediction market. Will Rushi Manch still be the CEO of Movement in 2 months? And imagine he tweets that out and it spikes to like no gets to 60%. That would be a really interesting data point for you. And the second derivative, or what that implies, is the more liquidity that you have, the better you are at surfacing information and telling truths about the world and being accurate. So if you have liquidity around something that is as generalizable as prediction markets, you have a really, really, really powerful advantage, actually. And I think exchanges and oracles both, or the oracle part of this is actually another really interesting component that could be a good play.
Yeah, but bespoke or maybe crypto native questions like that example with Movement are kind of crypto endogenous, where I think that is less what I'm saying. I'm saying more of like the financial markets questions. And I think my general take is, there are hundreds or thousands of multiples more people who are trading around something like the FOMC that just happened today. Stayed the same, no surprise. But and there are ways to express that view in traditional financial instruments that have, or many orders of magnitude, way more depth than we even see in crypto. And I think that there is a little bit of like muscle memory when it comes to people who are trading those markets, that they want to be able to trade swaps. They want to be able to trade, derivatives that are hooked up to their Bloomberg and their brokerage accounts. And there's like the element of like convincing them to use a new product is way harder than even if it is, way less complex. They're just like used to the way that they do it. It's kind of like why everybody trades options in traditional markets, whereas like there are more efficient ways of doing it. So I think breaking through in the financial market specific questions is going to be a hard one. Obviously, a much bigger TAM, but much harder to do.
These are sort of being played out with two different approaches here. Polymarket is a DTC approach, like they want you to go onto their site, and they got something like 50. And then Kalshi is more like, they're okay with white labeling and they tap into the distribution of Robinhood. So you're kind of playing both of those different strategies out in real time, and there might be room for both, or maybe one of them just ends up being dominant. But all right, fellas, I think that's it. Shout out to Karen Reed for her victory. I know you're thrilled, Michael.
Beat the case.
And hope to see those of you who are traveling to New York or New York at permissionless. There was Jason and I promised to do, if 0x Research got enough tickets, we would do the dunk tank. But I'm not sure if they crossed that.
I remember when Selkis did the dunk tank. I was going to say drunk tank.
Freudian.
Yeah.
We'll have a live recording next week.
Yeah, that's gonna be a blast, guys. What do you guys? Well, we can talk offline, but yeah, would be great to grab a beer or something outside of this too. So, all right, guys, look forward to seeing you in person, and cheers.
All right, later, guys.